Ever bought something and watched the price immediately tank? Now imagine that with your entire crypto portfolio, you bought Bitcoin at 104,000 in November 2024. You'd done your research. Institutions were flooding in. BlackRock had their ETF MicroStrategy was buying billions. Now you're watching it bounce between 85 and 98,000, asking yourself, we hit all-time highs. The ETFs are here. Institutional adoption is real, so why isn't this thing at 150 or 200,000 yet? What am I missing? I'm Leo, and I spend way too much time analyzing why assets don't behave the way they should. If you grab Bitcoin between 95 and 108,000 recently, understand the fundamentals, but can't figure out why price action makes no sense compared to institutional adoption, hit subscribe and drop a like if this helps. I wasn't planning this video. The whole banks manipulating Bitcoin narrative felt like conspiracy territory. But then I started examining actual mechanisms modern financial institutions can legally use to suppress asset prices. And what I found genuinely shocked me. We're not talking shadowy backroom deals. We're talking financial structures that have demolished billion-dollar companies, structures that are perfectly legal with historical precedent spanning over a century. Most people miss this. The exact playbook used to collapse hundreds of companies in the early 2000s is potentially being deployed right now against the world's largest Bitcoin holders. Let me start with something that'll connect. In 1982, Mexico borrowed billions from international banks for infrastructure and growth. Problem was that debt was denominated in US dollars, not pesos. Mexico doesn't control US dollars. They can't print more. When the Federal Reserve raised rates fighting inflation, Mexico's debt payments exploded. The dollar strengthened, the peso weakened, and Mexico faced an impossible situation, owing $80 billion with no repayment path. The IMF stepped in with a rescue package, but that rescue meant Mexico had to privatize state companies, cut social spending, open markets to foreign investors, basically sell pieces of their country to repay banks. This exact pattern played out in Argentina, Brazil, Indonesia, dozens of countries over following decades. You might think, Leo, what does this have to do with Bitcoin? Everything what I just described is a debt spiral. When you owe debt in currency you can't control, you're not just facing economic pressure, you're risking losing control of your assets. This same mechanism doesn't just apply to countries, it applies to companies. Right now there is a company holding over $60 billion worth of Bitcoin, structured in ways making them potentially vulnerable to this exact trap. Different example. Imagine owning a house worth $500,000. You take a home equity line for $100,000 at variable rates. Rates are low, you're paying $400 monthly. Then the Fed raises rates. Suddenly you're paying $900, then $1,000 monthly, and your income hasn't changed. If you can't afford payments, 3 options: sell the house, refinance, meaning more debt, or default and the bank takes your house. The moment you worry about making payments, you start making desperate decisions. The bank did nothing illegal. They just created a structure where your interests and theirs fundamentally misaligned. Now scale that up. Instead of a house, imagine 60 billion worth of Bitcoin. Instead of home equity, imagine 16 billion worth of convertible bonds and preferred shares. That company exists. It is MicroStrategy. Understanding what is happening with MicroStrategy is key to understanding why Bitcoin might be getting artificially suppressed. MicroStrategy is on paper a software company, but they've become essentially a leveraged Bitcoin fund disguised as a corporation. They raise money 3 ways: sell stock shares, issue convertible bonds, issue preferred shares, then they buy Bitcoin. Currently, they own about 450,000 Bitcoin, worth roughly $45 billion. They paid about $27 billion, so they're sitting on $18 billion unrealized gain. Sounds amazing, right? Here's the catch. Those bonds and preferred shares come with obligations. MicroStrategy owes about $700 million yearly just servicing debt and dividends. That is almost $2 million every single day. Their software business generates maybe $100 million in free cash flow, not enough. They've built a cash reserve of about $1.2 billion to pay these obligations. At current burn rates, that reserve lasts about 20 months, less than 2 years. MicroStrategy stock currently trades at premium to net asset value. Market values the company at $50 billion, but assets are worth $30 billion. 20 billion premium. Why? Because investors believe MicroStrategy will keep buying Bitcoin, and Bitcoin will increase in value. As long as stock trades at premium, they can keep selling shares to raise cash. But what happens if stock stops trading at premium? Suddenly, they can't sell shares anymore because selling would be like selling Bitcoin at loss. That 1.2 billion cash reserve becomes the only thing between them and having to sell Bitcoin to pay obligations. 20 months. If they start selling Bitcoin paying debts, Bitcoin price goes down. If Bitcoin price goes down, MicroStrategy stock goes down further. If stock goes down further, they sell even more Bitcoin. This is the death spiral. Why would anyone want this? Imagine you're a major investment bank with institutional clients, wanting Bitcoin exposure, pension funds, endowments, sovereign wealth funds. These institutions can't just buy Bitcoin directly. Too volatile, regulatory concerns, custody issues. But what if there was a way buying Bitcoin at massive discount? Instead of paying $95,000 per Bitcoin, they could effectively buy it for $70,000 or $75,000. If MicroStrategy gets pushed into position where they must sell Bitcoin, they're doing block trades. They'll call major banks saying we need selling 5 billion worth of Bitcoin. Those banks will say sure, but we want discount. Suddenly these banks buy billions worth of Bitcoin at 10, 15, 20% below market price, then sell it to institutional clients at markup or hold it themselves. But for this working, they need MicroStrategy actually in distress. They need stock trading below net asset value. They need that cash reserve running low. How do you create that pressure? You short the stock. I don't have evidence of coordinated conspiracy, but I have history. In early 2000s, there was financing structure called floorless convertibles. Companies struggling would approach hedge funds for cash. Hedge fund would lend money, but payment was in stock. And the lower stock price went, the more shares they got. What is the incentive? Push stock price down. You short it, spread negative rumors. SEC investigated hundreds of these deals. Companies entering these agreements saw stock prices fall average 34% within 1 year. 85% had negative returns, and 48% were completely delisted. This actually happened, real companies entering these agreements. Real shareholders who lost everything, and it was perfectly legal. MicroStrategy doesn't have floorless convertibles, but psychological dynamic is similar. In February 2020, 5 MicroStrategy stock fell to point where entire company was valued 10 billion less than Bitcoin they owned. You could buy shares and effectively get Bitcoin at 18% discount. Why? Market was pricing in death spiral risk. During that period, we saw massive short interest, billions in short positions. Jim Chanos openly said he was betting against MicroStrategy. JP Morgan published reports saying MicroStrategy was overvalued. Structure was risky. Most people don't realize how modern financial warfare works. You don't need doing anything illegal. You just need understanding incentive structures and exploiting them. People understanding this dynamic are ones who win. First, understand MicroStrategy is not Bitcoin. Bitcoin is decentralized asset. MicroStrategy is company with complex capital structure. If MicroStrategy gets in trouble, that doesn't mean Bitcoin is flawed. Second, recognize this pressure creates opportunity. If institutions are trying acquiring Bitcoin at discount by forcing distressed sellers, they want Bitcoin. They believe in long-term value. They're just trying getting it cheap. If you're long, term holder, worst thing you can do is panic selling during manufactured pressure because that is exactly what institutions want. Third, pay attention to timeframes. MicroStrategy has about 20 months cash reserves. If Bitcoin's price recovers before then, if they can refinance debt on better terms, whole death spiral thesis falls apart. Psychology here is everything. People who win in markets aren't ones with perfect information. They're ones who can manage emotions and stick to strategy when everyone else panicking. When retail investor sees Bitcoin drop, they think I'm losing money, I should sell. When professional investor sees same drop, they ask why is this happening, and is fundamental thesis still valid? If they determine price is being artificially suppressed through financial engineering rather than fundamental problems, they do opposite. They buy more. This is how wealth transfers happen. Action steps. 1. If you own Bitcoin, do not panic sell based on short-term price movements. Question isn't whether Bitcoin will drop 20 or 30%. Question is whether long-term fundamentals have changed. In my view, they haven't. To pay attention to MicroStrategy quarterly reports about cash reserves, debt obligations, Bitcoin holdings. If you see that cash reserve running low, if you see them actually selling Bitcoin, That is real signal. Until then, it is speculation. 3. Diversify holdings. If you see that cash reserve running, don't put everything in Bitcoin or any single asset. The fact that there is all this pressure, all this drama, all these games being played actually makes me more confident in Bitcoin, not less. You don't engineer complex attacks against assets you think are worthless. You ignore worthless assets. You engineer attacks against assets you want to own but don't want paying full price for. If you believe in long-term thesis that scarce decentralized digital asset has value in a world where governments print trillions, then short-term price manipulation shouldn't change your strategy. It should be opportunity. Hit subscribe if this helped you understand what is really going on and keep learning, because best defense against financial manipulation is education. I am not a financial advisor, mortgage expert, or licensed financial professional. The content on this channel represents personal opinions only and is intended for educational and entertainment purposes. Please conduct your own research and seek professional guidance before making any major financial decisions. See you next time.